Effective July 1st, 2013, electronic filing of FinCEN's BSA e-filing system is mandatory for all FBARs. In addition, the FBAR form, previously known as the TDF 90-22.1, was superseded by the FinCEN Form 114. So you may be asking yourself, when is the FBAR due? The FBAR filing is due on June 30th for the prior calendar year. Unfortunately, there is no filing extension is available. So there are 4 elements of FBAR filing. The first element is that U.S. persons must file if they have a financial interest in or signature authority over an account. That account is a foreign financial account. And lastly, if the aggregate value of the accounts exceeds $10,000 at any time during the calendar year. So what does a U.S. person mean? It means U.S. citizens, no matter where they reside, U.S. residents, and U.S. entities, which is any entity created or organized in the U.S. or under U.S. law. A U.S. resident generally means a person that meets the green card and or substantial presence test, and those who have elected to be treated as residents. Financial interest generally means a U.S. person who is the record owner or holds title directly, whereas signature authority means that you're not an owner, but you can control the disposition of the account assets. Foreign means outside the U.S. It's the physical location of the account that governs whether the location is outside of the U.S. And for purposes of the FBAR, the U.S. means all 50 states, D.C., and U.S. territories and possessions. Financial means both monetary and non-monetary assets, such as bank, brokerage, and investment accounts, insurance and annuity policies with a cash value, and mutual fund holdings. In general, it does not include real and personal property. There are exceptions to reportable accounts that are defined in the FBAR instructions, or that your qualified tax professional could advise you about what exceptions may apply to you. An account, for FBAR purposes, means a relationship with a financial institution or a person acting as a financial institution. Lastly, aggregate value exceeds $10,000. To do this, you aggregate accounts with financial interest and those with signature authority. If the aggregate value exceeded $10,000 at any point during the calendar year, then an FBAR is required. So each account must be valued separately at its highest value for the calendar year. You can rely on periodic statements such as monthly statements. However, you may find it easier just to ask your bank for the highest value for the year. It's always a good idea to keep a written record of this information. The value in your local currency must be converted to US dollars, and it must be done based on the December 31st Treasury reporting rate of exchange. When you aggregate all accounts, you want to make sure that you don't double count accounts for determining the threshold. So let's take a look at how this works. Let's say you have a bank account with $9,000, of which that bank account is then closed and moved to a new bank account, number 2. Bank account number 2 has the same $9,000. In this situation, you do not double count the 2 accounts. Filing is not required in this situation. However, the total of both accounts are $18,000. However, they were not more than $10,000 at any given time. Therefore, filing is not required. So let's look at another example. Let's say you have the same $9,000 in account number 1, in which that account is closed and this $9,000 is moved to bank account number 2. But you also have a third account for $4,000. In this situation, filing is required. The accounts exceed $10,000, therefore filing is required and all 3 accounts must be disclosed. The FBAR reporting requirements, unfortunately, are deceptively complex, with severe penalties for failure to comply with the requirements. So please don't hesitate to contact us here at Tax Samaritan for assistance with your FBAR reporting needs. Whether we're talking about timely filing or late filing, we can help.